Good morning and good afternoon, and welcome to the July 2023 WASDE Review Webinar. My name is Andy Miller with DTN. I'll be your moderator today. And with me, as always, is Todd Hultman, Lead Market Analyst for DTN. During this event, all participants will be in a listen-only mode, but please do ask questions at any time during the event. And to do this, click on the chat icon located at the bottom right of your screen. It'll open a message panel where you can type in your question, and that will be relayed to the panelists, including Todd. We will address all questions at the end of the webinar after Todd finishes sharing his report. Also, this webinar is being recorded, and we will have a rebroadcast link up within the next 2 business days. And a reminder, our web address is dtn.com. So with all that out of the way, I will turn it over to Todd and let him run through his report. Off to you, Todd.
Thank you, Andy. Hello, everybody. Happy July report day, I guess. Here we have a WASDE report that it's in an awkward time of year, to be honest. We're obviously having very serious drought issues across the Midwest. We're still trying to get a handle on what that means to crops. We don't have a lot of evidence yet other than the weather data. We also have a history where USDA typically does not change the corn yield in the July report. The last time it did was 2012, and it happens to be a time when the U.S. Drought Monitor map looked very similar to what it did today. So there were questions, I think a lot of questions about what USDA would do with the corn estimates today, and we'll jump right into that and take a look. So it's been an unusual summer. It's been hotter and drier than usual early. Now we're starting to get some rain come through the weather pattern. Even here last night and today, we're seeing some beneficial rains come across the central Midwest. So we have a lot of factors at play. Weather is still king. So let's go ahead and jump in. Starting with corn, take a look at what USDA said for today. Here is the U.S. balance sheet. On the left, we have the old crop column totals, and on the far right, we have the new crop season of USDA's corn estimates. I want to just start briefly in the old crop total on the left. If you recall, on June 30th, we had a report of quarterly grain stocks, and that found 4.1 billion bushels of corn stocks on hand. It was about 155 million bushels less than expected. So what did USDA do with their ending stocks estimate? Here on Wednesday, they lowered it 50 million bushels. The rectangle in the left column shows a new ending stocks estimate, 1.402 million bushels. That's down 50 million bushels from last month. So I have to think that that's related, at least in part, to the findings of the corn stocks report from June 1. Basically, there were 3 changes noted. I should have, okay. So the first change and the biggest change was feed and residual demand. That was increased 150 million bushels from the June report. So now you see on that column with the red arrow, 5.425 billion bushels feed and residual demand. That's always a line that's difficult to estimate from a private view. It's always difficult to explain exactly what USDA is thinking behind that number. If it was just feed demand alone, that would be one thing, but when they throw in residual, that always adds the category of miscellaneous to that particular item. But I think it's fair to say that this year there has been stronger domestic feed demand for corn around the country than was being previously estimated, and that's probably the chief lesson that we got from the June 1 corn stocks total. Another adjustment was made to ethanol demand. That was lowered by 25 million bushels. So far this year, and after today's report even, ethanol demand, or the amount of corn used to produce ethanol, has been roughly 2.5% lower than the previous year's pace. So this 25 million bushel production is actually a modest reduction that puts it a little bit more in line with how ethanol production's been going. And then lastly, the export estimate, which is at the upper end of the rectangle there, 1.65 billion bushels. That's a 75 million bushel reduction. That's something we've been talking about all year long, is the disappointment of corn export sales this year. Brazil, coming off of a record crop last year, has outcompeted the U.S. And of course, our crop harvest was short last fall due to a lot of drought and hot and dry conditions around much of the Corn Belt. So the combination of the U.S. having a short crop last year and Brazil having a record crop has really hurt us on the export sales side of the ledger, and we see that adjustment being made again today. So anyway, it all washes out to a 50 million bushel reduction in the ending stocks estimate for old crop corn. So we have a slightly tighter situation than what we saw a month ago. Now with 50 million bushels less of carry from the old crop season, let's turn our attention to the new crop season. That's the right-hand column. We'll start at the top. We know USDA on June 30th estimated 94.1 million acres of plantings for corn. That's the highest in 10 years. It was more than most of us expected, including myself. I'm still a little baffled by the number, but I do have respect for the June 30th acreage report, and especially in a year like this when there weren't really many strong weather challenges interrupting the planting season. So for now, we are going with the 94.1 million acre corn planting estimate. The big question, what would USDA do with yield today? Well, you can see here they brought it down. It was 181.5 last month. That's been kind of the old standby since the Outlook Forum in February. Now that was reduced to 177.5. So obviously we have serious drought throughout the Midwest. Many of us are thinking that the actual corn yield is probably quite a bit less than 177.5. I'm thinking maybe 175 at the most at this point in time, but anything in the low 170s I think is probably considered reasonable for the conditions that we see around the country at this point. But I will agree, it's too early in the season to be confident about any number. So USDA looks to me like they use kind of a half stair step method here. They did give a nod to the weather conditions. They did do something they don't normally do, which is change the July yield estimate, but they didn't change it very much. So we end up with a new crop estimate of 15.32 billion bushels. If true, that would be a record crop this year. And so we'll see if that stands the test of time. Personally, I doubt that it will, but there's a lot of weather and a lot of season still in front of us. So 15.32 billion bushels. All the demand estimates were left unchanged today. The ending stocks estimate for the new season only increased slightly, just by 5 million bushels. So instead of talking about 2.257 billion bushels of ending stocks, now we're talking about 2.262 billion bushels of ending stocks. That's, if true, that would be the most that we've seen in 7 years for corn, and USDA is estimating an average farm price of $4.80, which is a fairly reasonable price estimate if the ending stocks do turn out to be that big. So that answered a lot of the questions that we had going into today's report, but there's more to talk about. So let's go ahead and move on. I just want to remind us of what the corn crop ratings look like at this time. Now, corn crop ratings are no proxy for yield. I mean, only in a very general sense. Do I mean that? So there's not a strong relation here, is what I'm saying, between corn crop ratings and what the yields actually turn out to be. But it does give us an idea of the weather influences and what the crops at least are visibly looking like from the outside. But everybody knows you can have green corn crops, but they're not maybe as productive as they are one year as they are another year. So anyway, this is kind of a visibility test, and we see the real stress not just in one or two states, but we see fairly low crop ratings throughout the heart of the central corn belt. And of course, Missouri and Illinois, Michigan and Wisconsin really taking the brunt of things right now. But probably just about every state with a lower than normal rating. The national rating as of Monday was 55% good to excellent on this corn crop. That's the lowest since 2012, which is the last time we had serious, or a drought of as serious as the one we're looking at right now. So moving on now to the world estimates for corn. Here's the old crop season. I just wanted to show we had two slight tweaks in the South American crop estimates for corn. And of course, in the case of Brazil, that crop is currently being harvested. So instead of Brazil having 132 million metric tons that they said a month ago, they're now looking at 133. So that crop estimate was bumped up 1 million metric tons. As I say, that's currently being harvested, and that is a record, another new record high for Brazil. Argentina's crop estimate was reduced 1 million metric tons to 34. Of course, Argentina suffered a serious drought this year, so there's still a little tweak going on. So we have a push here on the influence of those two countries. Now let's look at the world estimates for the new crop total. In the upper right rectangle, you'll see that last month's estimate of roughly 314 million metric tons was just increased slightly to 314.1 million metric tons. Right below that, we have the metric that I pay more attention to, and that is the world ending corn stocks excluding China. And that measure was slightly increased in July from 109.7 to 109.8 million metric tons. So not much of a change there. The only other change worth noting, I'll draw your attention to, is the small square under the Ukraine column, and we saw that production estimate of corn go from 24.5 up to 25 million metric tons. So Ukraine continues to do remarkably well considering the situation that it's in, being under attack from Russia every day. They have produced a lot of corn through the war and have been successful in moving it. So here's another small increase. Overall, I just wanted to point out that the new world corn production estimate is up 6% from a year ago. So we're looking at significant improvement yet, but of course the U.S. will be a big part of that, and we have a lot to learn about the U.S. crop. The world demand estimate is expected to be up 4% from a year ago. So you can see this is a year when corn supplies are expected to gain again on demand. This shows that in a way. Here is the chart which represents world corn supplies excluding China. The latest estimate, 4.32 billion bushels of corn, is represented by the green bar in the new crop season. And if true, that'll be the most in 5 years. So we've had a series of years of declining corn supplies around the world, but this year corn supplies are expected to be added to. And so far as we can tell, the corn crop in China is doing reasonably well. So there's been no other big changes other than most of the attention being on the U.S. crop this year. And by the way, there were no changes in Russia or South Africa production estimates either. Corn basis, this is our reading of demand. How is demand doing? Well, we saw a big drop in the basis in the month of June. And of course, corn prices are in a transition in the summertime, going from a tight old crop situation that we've had now down to the expectation of a bigger crop and more available corn supplies in the new season. So that's part of the reason for the weakening basis. And of course, it's also been influenced by weather expectations. So when we started seeing rains show up in the forecast, that also had an effect on weakening the basis. But mostly for the last few weeks, basis is stabilized. It's still looking at today and comparing it to previous years, and that's what all the squiggly lines on the chart are. The solid red line being where we're at today. The basis is 43 cents above the September futures contract. And by the way, that's using our DTN National Corn Index. So it's a representation of the national corn price that we compute here at DTN. So 43 cents above the September contract for this time of year is the fourth strongest basis that we've seen since 2010. So it's not as strong as it was earlier this year, but it's still much better than average for this time of year. and a good sign of demand. And still largely that comes a lot from our domestic feed demand here in the U.S. U.S. corn exports. This has been the disappointment of the year. They continue to be sluggish. Corn exports are on a path for their lowest in 10 years. As of June 29, we had 1.38 billion bushels of corn shipped. That was down 33% from where we were a year ago at this time. So the red line is where we're at. The green shaded area is where we were at a year ago. And the black line is the 4-year average. So you can see we're trailing all measures by quite a margin there. And again, Brazil has been the real source of competition that's kept us out of the market. They've had cheaper prices for quite a while now. Here's the December corn chatter. I just wanted to point out something about what prices have done lately. Obviously, it's been a very volatile summer already so far this year. We had a bearish outlook for corn heading into May before the weather started turning drier than expected and also turned hotter than expected. And so we saw that big spike up in prices in early June, but obviously that quickly turned as some of the forecasts and rain started coming through in late June, and forecasts started looking better for the first half of July. And then, of course, on June 30th, that big planting estimate, 94.1 million acres, also put another nail in the coffin that will be hard for corn to get past. So right now, corn prices are a little hesitant to break lower, but I will say they're trading down 13 cents as we speak at 4.88 on the December contracts. So prices are under pressure here. Non-commercials, the speculators in the market, they were heavily short in mid-May. They got turned around on the weather scare. Then they got net long at the top, basically, when we had the hot, dry concerns. And now they still have a long position, so they still have some liquidating to do, and that's adding to the bearish pressure that we see on corn prices today. Okay, tough situation there for corn, but again, I just want to reiterate that these yield estimates, these crop estimates are very early here in July. There's not a lot of evidence or substance behind them. So we're going to be talking about this corn crop for months to come, and we have a lot more to learn. So I'd really strongly advise the market not to take these estimates too seriously today. Soybeans, the U.S. soybean balance sheet, same thing. We've got the old crop column on the left, the new crop series on the right. Let's start with the old crop column. On soybeans, we see just some slight tweaks here. The ending stocks estimate of 255 million bushels, and this is the old crop season, is up 25 million bushels from last month's estimate. That comes largely from a 20 million bushel reduction in the export estimate. Now, this is the second time USDA has reduced the export estimate, and I have no understanding why. I can tell you that the sales to date have already exceeded the 2 billion bushel export estimate, and the shipments are ahead of pace slightly from where they should be in regards to the estimate. So I'm not sure where USDA is coming up with this, but they continue to think or insist that old crop soybean exports somehow will be less. So they took 20 million bushels off. They also made a slight tweak to the import estimate of 5 million bushels. So that ending stocks estimate, 255, is up 25 from where it was at 230 a month ago, but I have questions about that, and we'll just have to see how it proves out. The other thing that causes me to wonder about this estimate is that in the June 30th grain stocks report, we saw the soybean June 1 stocks come in less than expected. So normally you would think that would point to a lower ending stocks estimate in the following report, but here now for 2 grain stocks reports in a row, we've had less than expected soybean stocks that don't get reflected and a smaller total on the WASDE report. So a lot of questions about what USDA is doing with that ending stocks estimate. So we'll have to see about this moving forward. Now let's turn attention to the new crop season. We knew a lower planting estimate of 83.5 million acres was on the way, and most likely that was going to reduce the crop estimate, and it did. USDA for soybeans did not change the soybean yield estimate of 52 bushels an acre. And that I think is not surprising because in the case of soybeans, those yields tend to be heavily influenced by weather in late July and August. So we'll have to see if the timely rains come through at that point. But clearly, crops are suffering largely around the Midwest. Now it's as our meteorologist has pointed out, it's a have and have not situation. So uh, some people get very good rains, their neighbors don't necessarily get the same rains. It's been a lot of hit and miss, and a lot of the rains that have come through have been in select areas. And then we've also seen situations, for instance, where I'm at right now in eastern Nebraska, we had a very hot, very dry start to the year that was very tough early wise on crops. But now several parts of Nebraska have seen multiple inches of rain and things have greened up. Well, the crops might be looking better, but did they lose some productive ability during that time? That's going to be a big question for us as we move forward. Well, just going by USDA's estimates today, we have a new crop estimate of 4.3 billion bushels. That's down from 4.51 estimated a month ago. And again, that low planting estimate was quite a surprise and shock to the market, and is probably going to make supplies tighter than this report looks. The crush estimate was reduced by 10 million bushels here to 2.3 billion bushels. The export estimate was reduced down to 1.85 million, billion bushels. That's common when you reduce supplies. That USDA also shows smaller demand estimates to go along with that. Take it all the way to the bottom line, and instead of looking at 350 million bushels of ending stocks, the market's looking at 300 million bushels of ending stocks. Now that's still up from 255 in the old season, and that 300 million bushel number today is much higher than the 206 million bushels that the market, that Dow Jones survey was expecting today. And I would suggest there's probably room for that to come down more in the days ahead. But again, weather is a big factor, and we'll have to see how the influence on crops plays out as the season moves on. So USDA coming down somewhat, basically from the planting estimate, but not budging yet on the soybean yield. So we have a 300 million bushel ending stocks estimate for soybeans. Here's the similar to what we saw for corn. Here's the soybean crop ratings, the good to excellent ratings. Nationally, we're at 51%. Good to excellent. That's also the lowest national rating for this time of year since 2012. And again, you can see the crops where things are looking the toughest, and that's Missouri, Illinois, Wisconsin, and Michigan. But again, nobody's in great shape as far as the central major producing states. Everybody has some stress that we see on this map. World soybeans. If we look in the upper right corner, we'll see that USDA's estimate of world soybean stocks dropped in this report from 123.3 down to just under 121 million metric tons. That's largely due to the lower crop estimate that we have here in the US. When it comes to Argentina, Brazil, Paraguay, of course, they haven't even planted their new crops yet. That won't happen till fall. All those estimates, though, were kept unchanged for the South American countries. The other thing to note, China had an import estimate reduction of 1 million metric tons. Instead of 100 million metric tons to import, the USDA is saying they're going to import 99 million metric tons, but their total demand use of soybeans stayed unchanged at 118 million metric tons. So not a big change. The only change really coming to the world numbers today is coming from the influence of a smaller crop in the U.S. And then similar to corn, we see USDA is expecting a 10% increase in world soybean production in the new season. Of course, a lot of that is depending on their expecting another expansion of acres in South America this fall. So we'll have to see how that turns out. On the demand side, USDA expecting pretty aggressive demand growth of 6%. But overall, we have a situation here where the expectation is that new supplies will be added to the total. The soybean basis is a little different than what we saw in corn. In corn, we saw a big drop in the month of June. We have seen the soybean basis weaken somewhat since the month of May, but we don't have the big drop off that we saw in corn. Currently, DTN soybean index last night closed at $14.40. That's 80 cents above the November contract, which is what a lot of the cash contracts are getting priced off of these days. We're still in a little bit of a transition period, but going by that 80 cents above the November contract, this is also the fourth strongest basis for soybeans since 2010 for this time of year. So 2013 was the real king of strong basis. And of course, if you note on this chart, in 2013, that strong basis only lasted up until the second half of July, and then there was quite a sharp drop. So that is often the story when you go from tight old crop supplies to more plentiful new crop supplies. But in this case now, with the smaller planting estimate for soybeans, the expectation has changed. And in fact, we don't really have that situation of expecting a big new crop anymore. We're now expecting more of a tight supply situation for a second year ahead. And I'll say regardless of today's USDA estimate. Right now, as we speak, November soybeans are trading down 32 cents. So they are reflecting disappointment in today's report, but we have a lot of time still ahead of us. Soybean exports have been doing much better than corn this year and are keeping pace quite well with last year's strong pace. As of June 29, we had over 1.81 billion bushels of exports of soybeans, and this is old crop again. That's down just 5% from a year ago, but it's actually above USDA's estimated pace. USDA is estimating a 7% decline on old crop soybeans. So um, uh, again, I don't quite understand why USDA reduced the export estimate by 20 million bushels today, but we'll see in the end how that works out. Currently, before today's reduction in the export estimate, sales were already 7 million bushels above USDA's export estimate. So we'll have to see what happens there. It all comes down to shipments, and so far shipments are on pace to reach that 2 billion bushel mark. The soybean crush, in the month of April and May, we saw a weakening of crush incentives, but that has rebounded quite strongly in the past month and a half now. Here, this chart shows the crush value is the blue line. That's the amount that you get from crushing a bushel of soybeans into bean oil and meal. And as of last night, that came to $17.30. But of course, this is all based on August futures prices, by the way. The cost of that soybean was only $14.71. So the premium, or that is the crush value in excess of the cost of the soybean, was $2.59 a bushel. Historically speaking, that's a very generous, very profitable return for soybean processors and very enticing for them to keep crushing soybeans. So the demand scenario continues to look good. We've seen a strong rebound in demand for soybean oils. That price has really rebounded the past 6 weeks. And so crush values continue to be strong. There's still a very strong market there. Renewable diesel is a part of that, but just the strength of soybean meal needed as a feed demand is also a very strong part of that. Here's the November soybean price chart, and also showing what the specs have been doing lately. Like corn, we had a very bearish outlook to start the year, early in the year, but it was in late May and early June. Actually, the drought monitor of June 1st could be seen as a real turning point in the trajectory of crop expectations. The June 1st drought monitor was the first day where it actually came out and showed widespread expansion of abnormally dry conditions throughout the Midwest. And so that's the first time traders actually had something to hang their hat on. And of course, it just got drier after that. And today we're at a very tough spot as far as the drought monitor looks. But the second surge in soybeans came on June 30th when USDA estimated that 83.5 million acre planting estimates. So soybeans are in a very strong position right now. They're getting a lot of not only fundamental support, but we've also seen a return of specs to the long side of soybeans, also supporting prices somewhat. But one thing I like about this chart is if you notice, soybean prices have had a big rally since the early days of June, and specs have jumped on board somewhat, but I wouldn't call this largely a rally driven by specs. This is a very solid rally, I would say, based on the fundamentals and the perception of tighter supplies ahead for soybeans. So that's one thing I like to see is that it's not just a speculative rally that's happening here. It's all about moisture. I wanted to show you just the latest reading from USDA of short to very short indications of subsoil moisture. And of course, we see the driest area in Missouri there. This goes along a lot with the crop conditions that you saw earlier, but very important productive Corn Belt and Midwestern states here have very serious subsoil deficits that are going to need more than just one passing rain to help heal. So we've got a very tough situation here, and it's going to be interesting to see how the summer plays out and how crops respond to it. I'll also leave you with this image. This is a comparison. On the left is the latest drought monitor map we have from July 4th. And then on the right is the map of the drought monitor that we have from 2012. Now, obviously, there's a lot more drought on the 2012 map in the western half of the United States. But if you put your attention in the Midwest, mostly on the corn and soybean states, you find that these two maps are actually quite similar. And in fact, the drought monitor showed that for the Midwest regions, both of these maps had 63% D1 to D4 ratings in the Midwest region. So at this point in history, the situation is very similar. I can also tell you that in 2012, meteorologists will remind us that the temperatures were hotter in 2012. And of course, the other and the most important factor in 2012 is that the forecasts for July and August were much drier than our forecasts look today. But that's not saying no one's expecting this drought to disappear. And in fact, the seasonal drought outlook that we got, the latest one from the National Weather Service, shows an expectation that drought will persist through much of the Midwest. We may see areas of improvement. And for instance, we are seeing some good rains work through the central Corn Belt today. But these areas of drought are likely to persist. And you have to think that that's going to be costing these crops some yield. On wheat, okay, we had a couple reports for wheat today. We had not only the WASDE report, but we also had a crop production report from NASS, which will give us an update of our U.S. wheat production estimates. Here for wheat, I'll just briefly mention that in the left column, the season that just ended on May 31st. Ending stocks ended at 580 million bushels, just as we learned from the June 1 grain stocks report that was released on June 30th. So 580 million bushels, ending wheat stocks for the U.S. That was the lowest total we've seen in 16 years. So the important point of that story being that we are starting the new season with a very low amount of wheat on hand, and that will color things. Now, moving to the new crop season, let's take a look at USDA's new production estimates, and they made some changes to the planting. So they 49.6 million acres of wheat planted is what came from the June 30th report. But it's interesting that they also increased the harvested area by 600,000 acres. So they now have a harvested area of 37.7 million acres. They bumped up the yield per harvested acre from 44.9 to 46.1. So they're seeing a little better wheat production out there than was estimated a month ago. The new crop size, 1.739 billion bushels, was more than expected. The trade was looking for about 1.677. The trade was looking to keep it under 1.7, but USDA comes up with a higher estimate of 1.739. The only couple of demand changes worth noting: the import estimate was reduced by 5 million bushels. That's not really a big deal. The feed demand estimate for wheat was increased by 20 million to 90 million bushels, which is a bit curious, but okay. So the ending stocks estimate now for the new crop season, instead of 562 million bushels, it's 592 million bushels. So USDA increased that ending stocks estimate by 30 million bushels on US wheat. It's still a fairly low total as far as historical standards go. Here's the breakdown, looking at the winter wheat estimates and spring. So the winter wheat estimate total is now 1.206. Sorry, again, that should be billion bushels. My mistake on that. Should be 1.206. That's up 9% from a year ago, and the trade was actually expecting 1.15 billion bushels. So that it's the winter wheat side that came in higher than expected. And we'll see basically there's two culprits here. The hard red winter wheat crop came in at 577 million bushels. That's 52 million bushels more than expected. So that came in larger than anticipated. The soft red winter wheat crop also came in higher than expected at 422 million bushels. That's up 20 million bushels from expectations. White winter wheat at 207 was close to expectations. Spring wheat came in at 479. That was just 8 million bushels above expectations. So we call that really a neutral estimate there. And then the durum crop I don't have listed, but it came in at 54 million bushels. That is down from an expectation of 61 million bushels. So we ended up with more, or we are ending up with, I should say, this is still a work in progress, as the winter wheat crop is still currently being harvested, not quite 50% done yet. But HR wheat and SRW wheat coming up today with higher than expected estimates. Spring wheat I would call neutral here. Just a quick look at the map of production areas. I thought it was a little bit interesting to compare to a year ago production. USDA's new total for Kansas is 208 million bushels. Last year, Kansas had 244. So it's understandable. We are very familiar with the drought, very tough situation in Kansas. Also had a tough winter and some freezes in there. So that 208 being down from a year ago is still expected, even though it's a little more than what they estimated last time. The state of Washington coming in at 99 million bushels is less than a year ago. And I'll just also mention that Illinois and Idaho totals were also less than a year ago, but we are seeing increases in production this year from a year ago is Montana near 81 million metric tons, Texas at 64 million metric tons, and Oklahoma slightly higher than a year ago at 70 million, or not metric tons, sorry, million bushels. My mistake. Um, so I just wanted to point out we are seeing a higher winter wheat production estimate today. Where is it coming from? Well, Montana, Texas, and Oklahoma explain part of it. I think as we look down the rest of the list, we would see that it's a lot of the more minor producing states that also contributed to today's higher total. But a lot of the big players, Kansas and Washington being the top two producers in the country, had smaller crops than a year ago. Spring wheat, we just have the crop ratings to show you here today, and as you can see here, ratings are down in the Dakotas. USDA said in the previous report 11.1 million acres of plantings. We've seen heat stress to crops in the Dakotas, so the spring wheat production is being held back. So that accounts, I would say, for the 479 million bushel estimate, which is basically about the same as spring wheat production came up with last year. The world estimates, now getting on to the world scene for wheat, and this is where some of the big influences on price come from. In the upper right corner, we see a smaller ending stocks estimate from USDA today for world wheat. Instead of almost 271 million metric tons, we see 266.5 million metric tons. Where did that come from? Well, if you look in the second column, you'll see three crop reductions from significant wheat areas. Argentina lost 2 million metric tons, down to 17.5. Canada lost 2 million metric tons, down to 35. In both Argentina and Canada, there's been issues with dry weather, and so we're seeing some adjustment from the drier weather situation. Also, there's been a concern about dry weather in Northern Europe, and so we see a reduction in the European Union crop estimate, 2.5 million tons lower, down to 138. The only other thing I wanted to point out, the production estimates for Russia and Ukraine stayed the same in this report, but USDA did increase the export estimate for Russia by 1 million metric tons. So they're expecting 47.5 million metric tons. Russia continues to be the largest exporter of wheat in the world and is currently the source of the world's cheaper prices. So they continue to have a strong hold over world wheat trade. But here we have a report, somewhat less. The final thing, back to the upper right corner, if we look at the world ending wheat stocks excluding China, we see a smaller estimate this month. Instead of 131, we're now looking at 129.4 million metric tons, and that shows up on this chart. 129.4 million metric tons is 4.76 billion bushels, represented by the green bar on this chart, and shows the lowest ending stocks total of world wheat in 11 years. And again, that's excluding China. So we continue to have a tighter than normal situation in both US and world wheat supplies, but prices have been have had a very heavy lid on them, I should say, here in 2023, and that doesn't seem to be changing quite yet. As far as the basis goes, if we look at the HRW wheat basis using DTN's national index, it's been a bit discouraging the past couple months. We've seen a weakening of that basis. It's now 51 cents under the September contract when we look at DTN's HRW wheat index. That is roughly average, but as you can see, we came from a very strong position in early May to now more of an average normal position for this time of year, now that we're here in the early part of July. So even though we have tight stocks of U.S. wheat here in the country, the demand has really shown no urgency for those U.S. supplies at this point, and we see that reflected in the weaker basis. The September Kansas City wheat futures chart, it's been basically sideways since December. It's got a very strong lid of resistance at the $9 mark. But if there is a little bit encouragement, it's that just recently, since early May, we're starting to see a series of higher lows supporting the market. Now, fundamentally, I would say this market's mixed. Yeah, we do have tight supplies in the U.S., but we just haven't seen very strong demand to take advantage of the tight supply situation. And as long as the world seems content with Ukraine and Russia's supplies, they aren't even using Europe's supplies that much. There seems to be little prospect that our demand situation is going to improve anytime soon. Now, of course, the war in Ukraine can change overnight, and lots of things can change the outlook for this. But in the current time, we seem to be in what looks like really a fairly stable trading range. But the only encouragement being is that we do see uh, a series of higher lows on the bottom end of the trading range. So we'll have to see how this plays out. But right now, it's holding strictly sideways. It's a tug of war that's not being won by either side at this moment. Okay, that wraps up today's reports and numbers. In conclusion, I'd say today's report was bearish for new crop corn. It's a bit disappointing, I think is fair to say, to see a 177.5 bushel an acre yield estimate. I understand USDA does not have a lot of hard data to go on yet, other than the weather data. And, I understand maybe that they don't want to get out ahead of themselves before they get out and get a better look at the crops. So that was disappointing to see the estimate of another new record corn crop, but of course that's also largely in the cards when you have 94.1 million acres of planting, so that's a tough situation. In soybeans, I'd call this basically a neutral report. I don't know if anyone's going to take the 300 million bushels of ending stocks estimate too seriously. I think most people understand that this is a tighter market than that, and there are bullish prospects here for soybeans. But again, a lot's going to depend on the weather ahead. And then lastly, for wheat, I would say this was a slightly bearish report, and largely because of the larger winter wheat production estimate that USDA came out with than was expected. The lower world ending wheat stocks estimate is somewhat encouraging, but the disappointment, I think, of higher winter wheat production in the U.S. Is going to weigh a little bit on prices. And here, as I talk, December corn's down 18, November beans down 32, Kansas City wheat in September's down 13, and Chicago's down 27 cents, with the spring wheat down 10 cents. So lots of numbers. Can't say I have a lot of confidence in any of them this early in the season. We'll see how things work out, but I'm glad to take any questions you might have. Back to you, Andy.
Well, Todd, I don't have any questions in the chat for you. I do know there were some issues some people had getting questions in the chat. We have looked into that and haven't quite perfectly solved it. So if that is the case, I do apologize. So just know we're looking into that. So for now, I don't have any questions for you. Thank you for switching to that. So if you do
Yeah,
have a question that did not get through here, Todd, thank you for putting your email up there. Please reach out directly to Todd, and I'm sure he's willing to help. So with that, I'll just say thank you to everybody for joining today. Quick reminder that this has been recorded, and we will have this the whole presentation up on dtn.com within the next 2 business days. And as mentioned, Todd's information is on the screen. Grab that if you'd like to reach out to him direct. So I'll just say thank you one more time. This concludes our event, and I hope everyone has a wonderful day. Thanks much.
thanks everybody.